Welcome to the Wealth Warfare Podcast, your front line for financial freedom and business success. Led by two former Army Rangers turned financial experts and entrepreneurs, this mission is to arm you with the strategies needed for wealth and business victory. Gear up for actionable insights and the discipline to win. Let's begin the battle. Here's your hosts, Josh and Brian.
Hey, what's going on, everybody? Today we got Cassey Bivens with us. She is a mortgage loan officer at Prost Mortgage Group, and we're going to ask her some questions and just kind of get to know her a little bit and see how talking with a mortgage loan officer can actually help you financially and some of the tips and things that she has for you guys. So what's going on, Cassey?
Hi, how are you?
Just living the dream, girl. What about you?
Can't complain. Life is good.
Yep. The girls doing good? They
Oh
get
my
over that
gosh.
sickness?
Yeah, they're finally over the flu. I think it's officially out of our house, and they're a lot better, a lot
Cool.
happier too.
Yeah. Sick baby is definitely not a happy baby. Yeah,
Yes.
I had to take my daughter to the emergency room 2 days ago to get because she had an ear infection, so she was not happy.
Oh, poor
Yeah,
thing.
she's doing better now. She's tough like her old man.
Yeah. Got some antibiotics in her system to help.
Yep. Alrighty, so let's crack this thing off. All right, so can you explain to everybody like what a mortgage loan officer does and how you specifically help your clients at Prost?
Sure. So, a mortgage loan officer provides information about many different mortgage programs that may be available. You do client consultations, you have to have loan product knowledge, you do pre approvals, you educate all of the buyers. It's a very complex job, and there's so many different variables to it. So my job is to talk with a potential buyer and lay it all out on the table for them. Let them know this is the steps, this is what has to be done. These are the options that are available for you based on, credit score, income factors, all of that. And I help them make an educated decision on what loan program they think best fits their financial situation.
Okay. So with your expertise in mortgages, what's the first piece of advice you'd give to somebody that's looking to buy their first home?
I recommend everyone carefully assess their financial situation. You want to establish a realistic budget, and then you want to interview different lenders and loan officers. Every loan officer has access to different mortgage programs that could be better for their situation versus going with another loan officer. But you don't know that until you interview and talk to multiple loan officers, and ask them questions like, what programs do you have? If somebody really needs help with down payment assistance, well, that's a great question to ask multiple lenders, as multiple lenders have access to different down payment assistant programs, whether it's state funded, it's city funded. Some of them are forgiven grants. Some of them are repayable as a second mortgage. But you don't know those things until you talk with a loan officer.
So how do you approach, financial education with your clients, like especially with those that are unfamiliar with the mortgage process? So say somebody that's looking to buy a new house, like myself, I just, moved back from Japan after being there for 8 years and, had zero clue what to do or, so I just kind of found a company that, well, I didn't really find the company. I found a realtor, and then the realtor had the people that they would suggest to go through, basically. So like, oh, hey, here's our suggested person. And then they kind of, so the house I bought my home from was Fisher Homes, and they have like an agreement with, some Victory Loan Mortgage or whatever they're called, I think it was. But so they have like their own preferred lender or preferred, mortgage company, whatever. So how do you give people advice on, what to do?
Yeah, so I was in your shoes at one point. I was 22 when My husband and I decided we were going to attempt to purchase our first property, and we were very uneducated. We didn't know anything about needing a down payment or having to have money towards closing costs. And then on top of that, you have fees that aren't included in the closing costs, such as inspection fees and appraisal fees. So when I do a buyer consultation, I lay it all out for them. I'm very transparent on the entire process from the start of the pre approval all the way through when they get in a contract on a property through the closing for that property. I let them know the potential challenges that can arise throughout the process and ensure my clients that there's going to be hiccups and problems,
Mm-hmm.
but I will find a solution for every single problem. I
Yep.
don't believe in problems, only solutions. So I make them aware of that ahead of time, and just educate them on the home buying process, letting them know if you need down payment assistance, there's down payment assistance programs. If you think you have poor credit, well, talk to me. I have loan programs that go down to a 500 credit score based on with different stipulations. But like there are programs out there available for just about everybody. Um, I have an in-house lender, but I also have access to 15 to 20 other lenders that I can broker through.
Mm.
That's another good thing with me being technically a brokerage and having access to those different lenders. There's not many scenarios that I can't find a solution for and help someone get into a home.
Yeah. So you're not just pigeonholed into one solution.
Right. Yeah.
Or it's like, oh, hey, well, we have to use these guys because we have a agreement with them, or a referral,
Yeah.
back and
They're
forth for the
referral
relationship.
partners
Yeah.
and referral relationships. And I understand that. But at the same time, like you have to take into consideration what's in your client's best interest. I've told people honestly to go with another company or to talk to them because they may be able to help them out a little better than me. I don't care. I'm not in this to only for making money. I want to
Hmm.
help people make their dreams of homeownership a reality. And if that means I refer them to a different company because I know that company may have a better down payment assistance program that is better for their financial situation, then that's what I'm going to do.
Well, and people will remember that too. So like,
Mhm.
hey, she, she didn't make any money off of it, and she just referred us to these people because they had a better deal for us. They will not
Yeah,
forget that. So I think when later down the road, or if one of their friends needs something, word of mouth is a powerful, powerful tool.
absolutely. And in my business, word of mouth is, I mean, it's a referral based
Hmm.
career. Just like realtors, everything's word of mouth and, showing clients that amazing customer service, it all comes back around one way or
Yep.
another.
One way or another, it's going to work out. So, not to get too nerdy, but in the context of wealth warfare, how do you see a mortgage as a tool for financial growth rather than just debt?
So you can't just think of it as, quote, just a mortgage. Like
Mm.
buying a property is an investment. Properties appreciate 5 to 10% every year. And this can allow homeowners to be able to tap into the equity that they've built up for various reasons. I mean, home improvements, debt consolidation, or to even invest into another property. So it's not just a mortgage. It's a lot more to it.
Mm. Okay. So it's kind of like an investment vehicle rather than just a mortgage.
Yes,
Yep.
absolutely.
Well, because then when you get, pay down enough of your mortgage, you can start building equity in your home, and then you can utilize that equity and to your advantage to, like you said, start purchasing other homes and start snowballing uh, the amount of net worth that you have.
Yeah, you can take full advantage of doing a HELOC loan or
Hmm.
doing a cash out refinance to get that equity out of your property to invest into another property.
Hmm. Okay, so can you share a success story where you have helped a client overcome a significant obstacle to secure a mortgage?
Absolutely. So currently, I'm working with an older woman. She's so sweet. And I'm working on getting her pre approved right now. Well, she
Okay.
has spoken to several loan officers over the past few years, and they all told her that she needed to improve her credit.
Hmm.
And credit is a big deal when it comes to getting a mortgage, but that's not the only factor. When I ran her credit, I called her up and I told her what her credit score was. And she was so ecstatic because it was a lot higher than she had originally thought. A lot of people rely on Credit Karma or any of those other credit monitoring services, but they're
Mm-hmm.
not always 100% accurate. When I pull credit, it comes directly from all three credit bureaus. And then most programs will take the middle score.
Mm.
So if you have a credit score of 600, 620, and 640, well, we're going to use the 620 because that's the middle score out of the three. So telling her what her credit is, and I came up with a solution. We can do an FHA loan using a grant program to help her and help it go towards the down payment and closing costs on a property. Obviously, there's stipulations for debt to
Mm-hmm.
income ratio and like certain areas that she'd have to purchase the property in. But just giving her that hope, like I can get you pre approved once I do
Mm-hmm.
income verification and employment verification. She was so excited. She was so happy. She was so appreciative because I mean she's an older woman and she
Mm.
didn't think purchasing a property would be a reality.
Mm.
And a lot of people have that fear when they think they have a low credit score.
Yeah, I think a lot of people are apprehensive to kind of reach out, and they get stuck in the trap of paying rent every month.
Right. And why do you want to be paying someone else's mortgage? That's essentially what you're
Exactly.
doing when you could be paying your own
Exactly.
mortgage.
Yep. 100%. Because, and it's usually cheaper to get a home than it is to be stuck paying rent. Because there was a place down the street from where I'm at now. I think it was like 2,400. Actually, I'm sorry. Yeah, 24 or 2,500 a month, but it was for a rental, right? So I'm not getting anything out of paying this money. I'm just paying to live here, and that's it. I don't build any equity. I'm not getting any benefits financially out of that.
Right. And a lot of
So
people don't understand that. And
yeah.
they're not educated about it.
Mm-hmm.
They just think that they have poor credit and that there's no hope for them, or that they need to get their credit score up to a perfect score. And that's not how it is now.
So um, what are some of the? I mean, we talked about a couple of them, but what are like the common misconceptions that you guys encounter about mortgages, and how do you guys address them?
The biggest misconception that I am constantly hearing is that you have to have perfect credit. You have to have an 800, 850 credit score to get into a loan. And that's not the case. As I previously stated, I have loan programs available for those down to a 500 credit score. Now, because the lender will be taking a larger risk with such a low score, there typically is a higher down payment required
Mm,
and potentially a higher rate than your normal 30-year
mm,
mortgage interest rate at that time. But it is possible.
mm,
People also think if they filed bankruptcy or they went through foreclosure that they have to wait until it's completely off their credit before getting a mortgage. And that's not the case either.
mm,
With bankruptcy, it's either 2 or 4 years from the discharge of the bankruptcy, typically.
mm.
But I have programs available with no seasoning after bankruptcy, meaning as soon as your bankruptcy is discharged, if you have the funds for a large down payment, then I can get you into a home.
That's awesome.
And a lot of people just they're not educated about it. They don't understand.
Yeah, I mean, I think a lot of people, once they're kind of done with bankruptcy, and it's kind of the society kind of puts you know, marks them as the black sheep, like, oh, well, they've been through bankruptcy and all that. Some of the most successful people in the world have been through bankruptcy, multiple,
Absolutely.
sometimes multiple.
Yeah.
So, you can't let that stop you from wanting to, either purchase a home or, pursue and make a pursuit in business or entrepreneurship, whatever it is.
Right. I know people who filed bankruptcy, and it's not an easy decision to have to make. Like, nobody wants to admit that they're stuck or they failed, or like they just can't manage the payments anymore because they dug themselves a hole.
Hmm.
But, bankruptcy is a good tool to also help teach you and educate you on how to better manage your finances so that
Hmm.
you don't get in the same pickle that you were in before.
Yeah. So, and talking about the mortgage industry. So, how has the mortgage industry changed in recent years, like that you've seen, and what should potential home buyers be aware of today?
Yeah, so with the industry, it is always changing. A lot of people refer back to when the housing market crashed back in
Hmm.
2008. And, I was really young back then, so I didn't understand exactly what had happened. But as I got into being a loan officer, I've learned a lot about, what caused that to happen. And what happened was loan officers and lenders, they were giving mortgages to people who couldn't actually afford them. They
Hmm.
were going based off of the client's word. If a client said they made 200,000 a year, well, they weren't being required to show proof of that.
Wow.
It's definitely caused our regulations to tighten up. When
Hmm.
I have to do a pre-approval, I'm not sending out my pre-approval until I can verify your income. And,
Hmm.
that could be paycheck stubs, W-2s, bank statements, profit and loss statements, tax transcripts, and it's over a 2-year period. But it's really helped tighten up those loose ends to ensure that another 2008 doesn't happen again.
Hmm.
Also, with digital transformation, going and being able to do online applications, electronic document submissions, having virtual closings to where, like, if your seller is in Florida, and they're selling a property in Kentucky, well, the sellers don't want to come to Kentucky just to sign. So being able to have a closer help them close in Florida so that they don't have to spend the money to come back up here. We also have DocuSign where a lot of the forms and disclosures can be signed electronically. That way, we don't have to meet up in person just for you to sign a whole bunch of papers. It
Hmm.
makes the process a lot easier. There's a lot less risk to it because you're
Hmm.
not handling a whole stack of papers and trying to make sure that you don't lose any of it. Um,
Yeah. Yeah.
with
That was probably one of the best parts of, going through the pain that is buying a new home. At least for me, was getting like you said, just the transfer of documents to being digital. I mean, that helped me so much because, and I think everything eventually is going to go digital, but just the fact that it was so easy to switch from, hey, come in, sign these papers, do this, make sure you keep track of them the whole time, and to now it's on an app, so much better.
Yeah, when I bought my house almost 8 years ago, I remember meeting up with my lender and having to physically sign a whole bunch of papers because at that
Hmm.
point they weren't electronic yet. And every time we would meet up, we would always meet up at Panera in Florence. And he always had a huge stack of papers. And I'm like, Ken, how do you keep track of all these papers? And it's a big risk. So being able to do things electronically definitely mitigates the risk for on the lending side, and ensuring all of the personal information is protected. We're not losing papers that could potentially have like social security numbers or anything on like that on it.
Okay. So here's a kind of changing the subject a little bit. So with interest rates, right? Because back in 2020, I mean, I wish I would have known, right? I mean, hindsight's 2020, no pun intended. But just looking at the interest rates and what they were then, I was thinking that I was going to stay in Okinawa, and then COVID happened, so that didn't really work out. But and then I see people like, oh well, interest rates were 2% or whatever a couple years back, so I'll just wait, and then wait for interest rates to go down and all that. So what would you say to those people that think, well, I'll just wait to buy a house. I'll just keep renting until, interest rates drop again.
I would tell them to stop waiting because the odds of the interest rates going back down to 2 and 3% again are very slim. That happened because we were in a pandemic
Mm,
and they were trying to lower the interest rates to try and help with the housing market. And, those rates are just unrealistic at this time. We're just hoping for them to get
mm,
under 6% again. When I bought my first home, that my interest rate's 4.5%. And I wish I would have jumped on that 2 and 3% interest rate because now, like a few years ahead, like I just know like it's not going to happen.
mhm.
So don't wait. And the longer you wait to purchase a property, then the longer it's going to take to start building that equity in the property.
Yeah.
Um, and then when the interest rates get lower, everybody's going to be swarming the housing market again. You're going to have 5 to 10 people bidding on every single property, and it's going to make it hard to purchase a property unless you go way over the asking price. And then when you go over the asking price like that, say you go over $40,000, well, then you have to hope and pray that it appraises for that much.
Hmm.
So yeah, like do not wait. Buy now. The rate it can be temporary. If you get locked in with we'll say 7% rate and the rates get down to 5.5%, refinance.
Hmm.
Refinancing is always an available option. And there's two types of refinancing. You can either do a streamlined refinance, meaning you only refinance what you owe on your mortgage, or if you have a lot of equity, you can do a cash out refinance. And that's where it pays off your current mortgage and also puts money in your pocket for you to do whatever you want with. Such as home improvements, debt consolidation,
Hmm.
schooling, because everybody knows the price of college nowadays is expensive.
Hmm. It's
So,
ridiculous.
yeah, start building that equity now. Don't wait.
Okay. So here's one that's kind of near and dear to the heart. So for veterans and active duty personnel, what do you guys do for VA loans compared to like a traditional mortgage, and what benefits should vets be aware of?
A lot of veterans and military personnel aren't aware of what their benefits can be when it comes to a VA home loan. A lot of people um, think that it's harder to get a VA loan versus a traditional loan, but that's not the case at all. The process is very, very similar with little to no extra work on the buyer's end. So, with a VA loan, it's a 0% down payment. There's no private mortgage insurance, meaning the lender does not charge you a fee every month to insure the loan.
Mm,
With there not being PMI, there is a one-time funding fee. It's up to, I believe, 3.3% of the loan amount. But then this is a lifetime benefit that can be used over and over. The closing costs are limited, which means they're going to be lower than the traditional loans. There's looser credit standards, meaning if you have a little like lower credit score, that's okay. We can still get you into a home.
mm,
And then the interest rates are very competitive. Sometimes they can even be lower than what we would be able to price out for a traditional mortgage.
hmm.
So these benefits are available for all veterans and military personnel. I highly recommend using them because they're available to you to help you get into a home.
That's awesome. So, and when we're talking about like the importance of credit scores and all that and in the process, so say if somebody, even if they're kind of out of the range of, I know you had some lower credit score stuff, for 500s, but what if somebody, is having issues, and, they're looking for advice on how to improve their credit score? What would you suggest for them to do?
So, whenever someone tells me that they just want generic information on how to improve their credit score, I give them two options. Option one is I can run your credit and tell you specific items and give you a specific time frame as to how long it's going to take you to increase your credit score. It's called a credit game plan. It's free to the buyers. We do not charge for it. It's just a service that we offer. And it could be as simple as paying down a credit card, but you don't know that until your credits ran.
Hmm.
Now, a lot of people aren't comfortable with their credit just being ran. So if they don't want their credit ran, option two is I can give them the basic information to improve their credit score. So that's going to be, making sure you have several different types of credit, revolving and installments. Make sure you're making all of your payments on time. Even missing one payment can drop your score significantly. And keep all of your credit card balances below 30% of the credit limit. You want to continue using your credit cards because that's going to show the lender that you can be responsible when it comes to credit, but you don't want it to be constantly maxed out. That shows the lender that you got the credit, but you're being irresponsible by it constantly being maxed out, and you don't want that.
Yep. Okay. So, how would you tailor your advice for, say, if somebody was an investor coming to look and purchase a property as part of like their wealth building portfolio? So, say somebody comes to you and they have a real estate fund, and they're like, "Hey, we want to purchase several multifamily real estate properties in this area," and then where would they start?
So when it comes to investors, it's really important to personalize or to offer personalized guidance based on what their financial situation is, what their investment goals are, and what their risk tolerance is. So, the first thing that I would recommend is analyzing their income and their credit history and the existing debts that they have. You want to make sure that they have enough income to be sufficient with paying back a mortgage. You also want to review their overall financial health and ensure that they can um, handle potential fluctuations in the real estate market. The market is constantly going up and down, so we need to make sure that they can handle that fluctuation.
Mm,
Um, we also will present various loan options. With having so many lenders that I can broker through, it's important that I reach out to each of those lenders and find out what they can offer my clients,
mm,
present those options to my client, and then allow my client to make an educated decision based on the information that I have provided, and what they think is best for their financial situation, because everyone's financial situation is completely different.
yep.
Um, it's also important to highlight potential tax benefits that are associated with real estate investments. You have your mortgage interest deductions, property depreciation, and then capital gains. It's also important that we discuss their exit strategy, whether it's selling the property for a profit or refinancing, or leveraging the equity for additional investments. So, those are just some key things that, as a loan officer, I have to take into consideration when working with investors that are wanting to continue purchasing more properties. And the lenders that I work with, they have different criteria. Like some of them will only allow you to have, we'll say, 5 investment properties at a time. So if that's the
Mm,
case, and this person is wanting to buy their 7th or 8th investment property, then I need to know that ahead of time. That way I don't present that lender as a potential option.
gotcha. Okay. So, and then I know you talked about it briefly about what you guys are doing different and, kind of innovating and stuff like that. But so, what are the kind of new innovative financial products or services that Prost offers that meets, kind of today's needs? So, what is it that you guys can offer people that makes you different?
We offer a lot of educational resources. And we do personalized service. Everybody's situation is unique, and really diving into those why questions, like, why are you wanting to purchase a property? Why are you wanting to get into investment properties? What's your why? Everybody has a why for everything that they do. So really making sure that we have a clear understanding of that allows us to continue giving our expertise and guidance and being able to provide the clients with um, clear communication and being transparent
Mm.
and being accessible as well.
Yeah.
As a loan officer, I don't work a 9 to 5 job.
Nope,
I
you don't.
work early mornings. I'm sending emails at 5:30, 6 a.m. before my kids have to get up for school. I work evenings once they go to bed. I'm working on the weekends. Like, my job is to service my clients and also the realtors that I partner with. And realtors don't work 9 to 5 jobs. So how can I expect to work just a 9 to 5 job?
Hmm.
So making sure I'm accessible through various channels. My clients can call me, they can text me, they can email me. If they want to reach out through social media, they can. And just letting them know that I'm always available is really important. And it makes the clients feel like you genuinely care about their best interest.
Hmm. Okay, so um, again, in the spirit of wealth warfare, what are some aggressive strategies? So aggressive but smart strategies, right? That you would recommend for people if they wanted to pay off their mortgage early?
I highly recommend trying to pay off your mortgage early. You will be surprised at how much interest you could save by paying off your mortgage early. So there's a few different things that you can do. You can do biweekly payments, and that would result in you to making 13 full additional payments a year. Oh, we have to redo that part. I
That's
lied.
fine. Go ahead. Do it again.
Okay. I highly recommend doing biweekly payments. When doing biweekly payments, you're making 13 full payments a year, which is one additional payment every year. So if you do that, you can pay off your mortgage, like 26 after 26, 27 years.
Mm.
Um, Also, you can round up your payments and have that additional payment go towards your principal. So if your
Hmm.
mortgage payment is $956.27, well, if you make $1,000 payment every month, that additional amount is going directly towards your principal. Also, if you get any lump sum payments, so tax refunds, work bonuses, you get an inheritance, or a gift of cash from a family member, put all of that directly towards your principal, and that will really help pay down that principal so that you're paying less interest.
Mm. So, can you explain the process of like if somebody wanted to refinance, and when would you suggest refinancing to somebody?
So the refinance process is very similar to just purchasing a home. So when you're wanting to look into refinancing, you'll reach out to a loan officer and you'll go through the same pre-approval process. So we still have to know, like, what can you afford? We have to run your
Mm.
credit, look at your income, verify employment, and then we'll also get a mortgage statement to see how much do you still owe on the property. With there being two types of refinance, we have streamline and then cash out refi. It's also important to get a clear understanding from your clients what they want to do. Do they only want to refinance their mortgage, or do they maybe want to get some cash out of the equity of the property? So we'll assess the current mortgage, we'll check credit, we'll gather the documents. You'll also want to research the lenders again. Just because the lender you worked with the first time was fantastic doesn't mean that their refinance program is just as good.
Hmm.
Everybody offers different rates, different terms. So you still want to interview multiple lenders in that, with that. And then you would submit your application. Your loan officer would handle everything else from there. If any additional documents are needed, it is your loan officer's responsibility to reach out to you and let you know. If an appraisal needs done again, then the loan officer will order the appraisal. We'll get it to underwriting, get the approval, and then we'll clear you for closing. And then at closing, if you're doing a cash out refi, you get a check at closing for the difference of paying off your current mortgage and the amount of your new loan. Um, when you're wanting to think about refinancing, a few things to keep in mind of the whys is your interest rate. Is your interest rate going to increase? Is it going to decrease? If the interest rate is lower now than when you first got your home, well, then you could potentially lower your monthly payments. You can also refinance to shorten the loan terms to pay off the mortgage faster. So if you originally got into a 30-year mortgage and you're 5 years into it and you want to refinance to a 15-year mortgage, well, you just shaved off 10 years from the mortgage.
So in a situation like that, so say you have a 30-year mortgage and then there's a 15-year mortgage if you wanted to refinance. So why wouldn't you just, in my mind, if the interest rate is better, on the 30-year that you have, why wouldn't you just double your payments?
Well, and some people have a hard time committing to doubling the payments like that.
Gotcha.
Whereas if you refinance and you get into a shorter loan term, then you kind of have to make that mortgage
Yeah.
payment.
Or they're going to come get your house.
Right.
Yeah.
And paying off the mortgage sooner if you do refinance it from a 30-year to a 15-year, that saves you so much interest. I can't express that enough because the amount of interest that you pay on a mortgage is ridiculous compared to what that original loan amount is. Just because it is over, 10 years, 15 years, 20 years, 30 years, like all of that interest is building up. So being able to refinance, you're forced to make that
Yeah.
larger payment versus
Yeah. So
doubling the payments.
yeah. So another thing too, with and this is kind of a problem across entrepreneurship, with anything. It's not just mortgages. It's anything that has to do with credit and verifying income. For myself, actually, if I wanted to, since I'm self-employed, and I have a couple other irons in the fire, but if somebody was self-employed, what kind of challenges do they face when applying for a mortgage? And what is the process that you guys go through for income verification? Looking at the tax statements, do you guys do like an average if they're self-employed? I mean, what's the basically what's the process for that? So I know that some people have even gotten a W-2 job just to say, hey, I have, verified, repeatable numbers. And so this is my income.
Yeah. So with being self-employed, there is a lot more risk to obtaining a mortgage from a lender because your income is not consistent. So there is a few more little hoops that we have to jump through in order to get you pre-approved and then eventually approved for a mortgage. But a few of the items is the inconsistent income. The challenge is that we typically prefer a stable and consistent income, such as a W-2 employee,
Mm,
just because with self-employed, you have fluctuating earnings.
mm,
But on the flip side of that, even if you're self-employed, you can get a mortgage. You just have
mhm,
to be a little more prepared to provide more detailed and accurate financial records, which includes your tax returns, profit and loss statements, and bank statements to show that consistent pattern of income over several years. So, because I'm technically self-employed, I work for
mhm,
myself as a mortgage loan officer under a company. I would have to have 2 consecutive years of that self-employment income. And that's why,
mhm,
like, I don't want my husband to leave his W-2 job because I want to be able to use his consistent income for whenever we need to finance anything.
mhm.
Also, tax returns are much more complex for
Yeah.
self-employers. Um, a lot of people take advantage of the tax deductions, which can then result in a lower reported income on your tax return. So I would give the advice of, if you're wanting to purchase a property in the next few years, you need to work with a tax professional to maximize the allowable deductions while still showing enough income to qualify for that mortgage.
Yep. And then that's just for people that are self-employed. So say if somebody's quote unquote self-employed, but they have their own business, and then they are a W-2 employee of that business, that's a different story, correct?
Absolutely, because they're technically a W-2 employee. So they can show that income on the W-2. So
Mm-hmm.
in that scenario, we would just need 2 years worth of W-2s, and we would average the years to determine what their income is.
Okay. And then, so if somebody's, we talked about refinancing, and, the bankruptcy thing and stuff like that. But if somebody's struggling to make their mortgage payments, what's the first step that you would recommend them do?
Immediately contact your lender, or whoever is servicing your loan, because a lot of time mortgage loans get sent off to be serviced elsewhere.
Mm-hmm.
So contact them.
Okay.
It's really important because there are typically several options available for those who are struggling to make their mortgage payments. There's forbearance programs that could help temporarily relieve the financial stress of the mortgage by lowering the amount. There's repayment plans, there's loan modifications. Talk to your lender,
Okay.
tell them your situation as soon as you know it's happening. Do not wait until you're a year in and your loan's been past due for the last year, because at that point you're heading towards foreclosure. We want to
Okay.
prevent that as much as possible.
Yep. All right. So we talked about some scary stuff a little bit. Okay. But now let's kind of have you get out your little crystal ball and we'll see, what are your predictions, for the mortgage industry over the next few years? And what do you think that home buyers or homeowners should do to prepare for it?
So I am not, like, I don't have a crystal ball. I cannot predict the future. But I will say, some tips for home buyers to keep in mind who want to purchase property in the future. You want to stay informed about the interest rate trends. Are they trending up? Are they trending down? At what point do you want to take that risk and get into a mortgage?
Mm,
Also, affordability. You want to assess your financial situation and determine what amount are you comfortable with paying every month. Um, but you also want it to be realistic. In
mm-hmm.
Florence, you're going to find it really difficult to find a property for less than, we'll say, $200,000. And that a mortgage on a $200,000 property is not going to be $1,000 a month. So you need to be
Yeah.
realistic. Talking with loan officers and lenders, they can help you determine, what is a realistic purchase price that you can look at that would fit within the monthly budget that you want to stick around each month. Also, while you have the time, save for a down payment. There's a lot of costs that are involved with purchasing a property that I had no idea about when I first purchased my house almost 8 years ago.
Yeah.
So I didn't know that I should have saved up for a down payment, or that I needed to have money for an inspection or have money for an appraisal. I had to reach out to my dad at the time and be like, hey, can you help us? Like, we're on out of the whim wanting to buy a house and we don't have any money for these things and we need help.
Yeah.
Also, do your research on the real estate market conditions and
Yeah.
what area you want to be in if it's a property that you're wanting to purchase to live in. Do your research on the schools, the area, property taxes. A lot of cities have higher property taxes. So that's good to know, especially from a loan officer standpoint, when you're ready to get pre-approved. When doing pre-approvals, we have to fill in estimated numbers for homeowners insurance and property taxes, because both of those items are part of escrow, which is then
Mm-hmm.
part of your monthly mortgage payments.
Yep.
So knowing that ahead of time allows your loan officer to um, estimate a higher amount to make sure that you're within the correct ratios for whatever loan program that you're wanting to get into. Also explore the different mortgage options with your loan officer. Like I said, there's so many different programs out there. I have programs available for just about everybody to get them pre-approved and into a home and be adaptable to the changing market conditions.
Yeah, so that's one thing too. So how do people kind of keep their finger on the pulse, so to speak? So if somebody is looking to get either buy their first home or buy their third, fourth, fifth, sixth, whatever investment property, just regular home for the family, how do they track the interest rates? So what's the indicator, or what government website do they got to go to, or how do they kind of keep in touch with the rates?
So, as a loan officer, I go to Google and I Google 30-year mortgage interest rates, and it'll pull it up for the nation, or if you want to look at state specific. There's a lot of variables that come to determining what the interest rate's going to
Yeah, like
be.
economic factors and stuff.
Yeah, it's so much more complex than what people think. And like there's so many different variables that control what the interest rate's going to be. Now, if the basic interest rate right now is 7% and you're like, I don't like that, I want a 6%. Well, I can get you at a 6% interest rate, but it's going to cost you a pretty penny.
Mm-hmm.
So if you don't like the interest rate and you want it to be lower and you have the extra funds to buy down your interest rate, that's an option. But just know it's going to cost.
That's cool. Yeah, it'll be expensive, but it'll save you money in the long run, really.
Absolutely. It just depends on, what your finances look like at the time you're ready to purchase a property. If you have the extra money, spend it on buying down the interest rate. If you don't, you're not married to the rate.
Yeah.
The rate can always be changed with a refinance.
Yeah. So, and speaking about like resources and stuff like that, so what kind of, can you share any resources, books, or tools that you guys recommend for someone looking into kind of understanding more how mortgages and the home buying process works? So
Yeah.
I know you guys said that you have a lot of educational material and stuff like that. So how do they just reach out to you directly, or do they, go to the website, and, how does that process work?
So there's actually a book that I love. It's called Home Buying Kit for Dummies, and it's a part of the popular For Dummies series.
Yeah.
But it gives very practical advice on every step of the home buying journey, from budgeting all the way to closing. Also, HUD, the U.S. Department of Housing and Urban Development, they are a great online resource. If you just go to their website, I believe it's just HUD.com, then there's so much information on there, and they really keep up with the changing markets and that kind of information.
Okay.
Some online tools that I recommend is mortgage calculators. They are really good to help you get a realistic idea of, if you want to spend $1,200 a month on your mortgage, it gives you an idea of what that purchase price could potentially look like. And just being able to run different scenarios. Also, credit score monitoring services. Monitor your credit. If you're wanting to purchase a property in the future, you want to know what your credit score is.
Yep.
If you think it's too low and you feel like you have the time to work on your credit, give me a call and I can tell you exactly what to work on to get your credit score at a number that you're happy with. Also, bankrate.com. They provide a variety of mortgage related tools, including mortgage calculators, rate comparisons, and educational articles.
So I know we've been talking about the things to do, but I've always heard too that one of the deal killers for trying to buy a home is to make a large purchase right before you purchase the home. So,
oh my goodness.
Yeah.
Yes.
So like, hey man, I'm going to get this house, it's $300,000 or $400,000. And oh yeah, I just bought a brand new 3,500 Dodge Ram Cummins, and fully loaded, decked out, $100,000 vehicle. what does that do for you guys in the process? And because I think people really don't understand, what the reason for that. It's like, why is it a big deal? Like, why does it matter?
When you start the home buying process and you get pre-approved, and you have that official pre-approval letter, you don't want to spend more credit, because when you do that, it messes with your debt to income ratio that we use, and depending on the program that you're looking at doing, it can kick you out of the program. The
Oh,
ratio could be too high, and then if that happens, well, we have two options. Either one, we can try and find you another program, or you're going to have to pay off some debt. Do not use credit until you have signed on the dotted line at closing. Do not buy new furniture. Do not buy new flooring or appliances. Don't buy anything on credit. We look at your bank statements and make sure that there's no large deposits. Like, we want you to be able to still live your normal life, just not on credit.
yep. All right. So to kind of wrap things up here, so what's the most important piece of advice that you have for everybody listening about using mortgages as a tool for their finances?
Yeah, so the most important piece of advice that I think individuals should consider is, take the approach with careful consideration and have a thorough understanding of your financial situation. I know I've said it before and I'm going to say it again. Everybody's financial situation is different. You cannot compare
Yep.
yours to anybody else's. So, when you have a good understanding of your financial situation and you have a clear ideal, a realistic ideal of what you want in a property and what you want to pay each month, it makes it easier for the loan officer. It really does. Because then we know what we need to do on our end as far as the pre approval goes. We don't want to give you false hope. Like, I mean, I can run your credit and run all the numbers. And on my end, it looks like you can be pre approved for a mortgage payment that's $3,500 a month. But if you're not comfortable with that amount, that's something we need to know ahead of time.
Yep.
And just maintain a healthy credit score. If you think your credit score isn't where you want it to be, and you want to wait to purchase a property, then work on your credit. Make sure you're making all of your payments on time. Keep your credit card utilizations below 30% of the credit limits. Um, have a variety of credits. Do not open more credits unless you
So
don't have that variety of credit.
yeah, so no new vehicles, huh?
Yes, no new vehicles, Josh.
Okay. So I guess I lied. This is the last question. So uh, you got me thinking. Have you ever noticed a difference in clients that come in? So say if a client comes to you just kind of out of the blue, they're doing this thing by themselves, never really talked to a financial advisor or, a financial planner or anything like that. Do you notice a difference between clients if, say, they do have a financial advisor and they have a budget and then they go through everything together, and they kind of have a handle on their finances? Do you notice a big difference between people that have, that person in their lives versus not? Do you know what I mean?
Yeah, it definitely makes it easier. And the clients who are already working with a financial planner or a financial advisor, they're already pretty well set on what needs to happen to
Mm.
get them into a home and get them that new mortgage.
So it's like pretty much
They're
they
just
already know
more
what they want,
prepared.
right? Yeah.
Whereas if someone is just like me, like willy nilly calling up a lender, hey, I want to buy a house, I was very unprepared, very uneducated. I wish I would have known more about the home buying process before I started the process.
Mm.
That's one thing that I really strive on is educating all of my potential buyers, my clients. Like, I want them to know every step of the process and not have to, just kind of walk through it on their own. Like, I'm there to hold your hand and make sure that it is as smooth of a process as possible.
Okay. So, yeah, before we wrap it up, so if somebody was like, okay, sweet, I'm pumped now. Now I want to get a house. How do I get a hold of Cassey? So how do they get a hold of you? What do they got to do?
Call me, 859-618-9681.
Okay. So give her a ring, guys. All right, Cassey. It's good having you on, and we'll see you
Thanks.
next time.
Yeah.
Yep.
Toodles.
Later.
That concludes today's mission on the Wealth Warfare Podcast. Your guides have delivered crucial strategies for your financial and entrepreneurial journey. Stay engaged by subscribing and sharing your feedback. Until next time, keep your goals in sight and march towards victory. The war on wealth continues. Farewell, warriors.